delay, let's begin today's event, sponsored by Ephesoft and hosted by National Mortgage News. I'd like to introduce your moderator for today, and that is Darren Pendergraft. Darren, you have the floor.
Fantastic. Hello, everyone. Thank you for joining us. We got a great presentation today for you, all about automating your mortgage processes. We have assembled top experts in the industry, and I think you're going to be really impressed. It's my pleasure to introduce to you our three panelists. First up, Mr. Pat Myers. Pat is the Executive Vice President and co-founder of Zia Consulting. Doesn't look like it, but Pat has actually been in the industry for over 20 years, servicing hundreds of mortgage automation projects. Pat, thank you so much for joining me today.
Thank you, Darren.
Next up, we have Mr. Craig Ungaro. Craig is the COO of AnnieMac Home Mortgage, been in the industry 13 years. And Craig and his team, I mean, besides being from a very recognizable mortgage logo, AnnieMac, his team's responsible for hundreds of millions of dollars worth of loan applications and paperwork. Craig, thank you so much for joining us.
Yeah, my pleasure. Thank you.
Now, the audience may recognize our third expert, Mr. Paul Centopani. Paul is actually the editor for National Mortgage News and a recognized expert in the industry. Paul, thank you so much for agreeing to be here and for sharing your perspective.
Yeah, of course. I've been in the industry covering this for 3 years, but it feels like 20. So I think I'm qualified.
Feels like 20. Well, hey, wasn't a competition, but thank you very much for that clarification. I do appreciate it. Ladies and gentlemen, as you heard, the way we're going to run the presentation today is, as you can see, I've assembled a panel of experts. We've got some panel discussion questions that I'm going to ask each of our experts to comment and weigh in on. But then, you know, what I think is going to make this a little more interactive and a little more interesting for everyone is we have poll questions as well. So this is good for the speakers. They can see what the audience is thinking. This is good for the audience. The audience, you can see what your peers are thinking, and you can vote. So definitely encourage you to participate, weigh in, and give us your opinion. To get us started, I wanted to sort of lay out the backdrop of the current state of our industry. To give you some numbers, just to kind of help frame up the conversation today, we're seeing about 49 days is the average to close. So, you know, depending on your perspective, that could be up or down. It'll be interesting as we kind of go through the discussion today, kind of hear where that, you know, where that sits in people's minds. I thought this next one was interesting, about 30 touch points on average. If you're still using a lot of paper documents, could be less if you've already gone digital and you're already, you know, automating some of these processes. But here's some good news, right? So 49 days to close, 30 average touch points. But this is really interesting, and I actually think it's good. Considering the current economic and pandemic crisis, 20 to 30% top line growth. So we're actually seeing revenue growth. And cost savings, 30 to 50% cost savings if you are using digital technology, if you are thinking about automating. We've also seen in the market 75% increase in productivity if you're thinking about automating or if using digital technologies, decreases in origination costs, and reduction in service costs. So that's kind of the backdrop. That's kind of where we're at now. What I'd like to do is get us kicked off with our first panel question. So for the panel, I think I want, Paul, I think I want you to kind of start this one, and then we'll go to Craig and then to Pat. But how has the pandemic, the COVID pandemic, impacted the mortgage industry? And there's a lot of angles. It's a pretty wide open question. You can kind of handle it how you want, but you know, maybe think about loan officers and their current working conditions, you know, working from home as most all of us are, you know, supply in the industry. I mean, there's a lot of different angles here. So let's start with Paul. Why don't you take a first pass at this one, and then we'll ask the other experts to weigh in.
Yeah, and I mean, that is a huge question, right? You know, for starters, I'm sure the industry's collective mental health is certainly suspect at this point. But the pandemic forced a largely in-person handshake business to be conducted fully remotely. And once interest rates crashed to historic lows, everyone wanted to refinance their mortgage or take out a new one to buy a home. And that just sent demand sky high. And for lenders, it was like standing in front of an open fire hose. And, some of them are still reeling from it, right? Their pipelines are just totally backed up. And, automation and tech obviously helped ease that a lot. Before, lenders wouldn't implement new tech because, of course, change is scary. And there are upfront costs, and then you have to train your staff on how to use it. But whether you liked it or not, the pandemic brought rapid adoption and alignment of technologies, or you just weren't making money. And that digitization probably advanced more in the past 18 months than in the past 18 years. And now that companies have gotten used to digital processes and working from home, things aren't just going to revert and go back to the way they were, assuming the pandemic ever ends. But lenders and employees realize not having to be in the same room with their clients to sign papers is a lot more convenient, and it saves everybody time and money.
Perfect. Okay. Craig, what is the AnnieMac perspective on the pandemic and the impacts it's had?
Yeah, really good points there, Paul. I mean, I think that it really has exposed us, at its core, and the drinking from a fire hydrant, kind of example is exactly right. Our employee engagement changed, our customer engagement changed, and it happened at a volume that was unsustainable even in a normal environment. So it really kicked a lot of things into high gear very quickly. An example that we had to stand up very quickly, something we've been sitting on and opining on for a long time, was digital e-closings, and we had to stand that up in like 60 days, right? Or at the time we didn't know if we would ever be able to close a loan if we didn't have it. So, right, that was a great example of something we talked about for 2-3 years, kicked the can down the road, and then this happened, and it was like, well, that's the only way we're going to be able to close loans, and so we had to make that immediate change. So it really has exposed us, and I would say that we're probably not out of it yet. And we're benefiting from sort of these still record high volume months that we have. We're probably more prepared for it 12 months later. We're doing about the same volume monthly that we were doing last year, but we have 12 months to staff up and be ready for it. So I still think that that exposure exists, and we're still taking some time to respond.
Excellent. Pat, your perspective?
It's a lot of the same. The first few months were just, how do we do something? How do we actually get a notary to somebody? How do we actually contact a title company that's closed? So I think that it was scrambling of how to actually get through that initial pain and kind of reinvent. Because like Craig said, people have been talking about this for years. You go to a digital mortgage show and they're talking about 10 and 10, like 10-minute application, 10-day close. And you can see that those stats that you put up, we're not there yet. Even after we have this pandemic crisis, we still don't have a full grasp of what's going on. And again, with the volume, there was it really depends on what range of lender or part of the mortgage industry you're at, but these volumes were just unattainable, to the point where there were local and regional banks that were just closing down sections, leaving money on the table. They were just like, that's a less profitable area. Like my investment portfolio, I'm just going to close down any loans there just because I can barely deal with it. And so these were people that still didn't have the infrastructure, the people, the knowledge to be able to harness this opportunity. And it was mostly because, like we're saying, we came from a handshake type of world, and just trying to adopt this new brave Zoom world was just enough tedium to try to get it and start seeing the actual vision now, trying to say, like, okay, we can adopt technologies. It's always been part of the mortgage industry where, there's kind of three different areas, like we have no time to actually invest in technology and change our business process. We don't have the confidence that the future is going to be good enough for us to invest in technology. And then there was these little blips of open windows of being able to say, okay, we're confident enough, but our volumes are enough. And the pandemic kind of just kicked it into gear, say you have no choice now. You have either, get up or shut up, and just move people, come to the table and put the ante down to be able to start, if not mature, their systems.
Perfect. Yeah. And that's a theme we've heard quite a bit, right? It forced a lot of thinking. Okay, that brings us to our first poll question. So the audience, here's your opportunity to weigh in. Pat talked a little bit about technology adoption. I'm curious, and I know the speakers would be interested to see your response to this. So select one, right? So from your perspective, where have you already started to automate or digitally transform your mortgage processing? So is it in the area of automatically extracting data from your loan documents? Is it classification and separating loan packages out into various forms and documents? Is it automating the underwriting process, automatically onboarding data in your loan origination system? Okay, now we want you to pick one, but there's an all of the above and none of the above or none at this time. So audience, go ahead and vote. I'll give you a few seconds. I want to keep things moving, so I'm not going to spend a lot of time on this, but we definitely wanted to see where the audience was and give you a chance to weigh in and show the speakers kind of where you're at and what you're thinking about your own automation initiatives. So we'll give this a few seconds. I can see people voting. All right. We've got a lot of great content to get to, so I'm going to give you 10 more seconds. So please think about this. Pick the one that fits you best. 10 seconds, 9, 8, 7, 6. I'm not a very good clock here. 5 seconds. I'm getting ready to close it up here. 4, 3, 2, 1. Okay, audience, here we go. All right. So interesting. All of the above. That is quite a surprise. Guys, anyone want to weigh in on that? I'm really surprised how digitally savvy this audience is. Maybe this is exactly why they're here. I mean, these guys can teach us something. Any comments?
I think that this touts to boots on the ground, talking with people, because the way we worded this question, do you have plans to do it? And
that's true. That's true.
Now people maybe not have implemented it, but actually have active projects or seeking active projects to be able to accomplish these. And many of them, they finally realize that they don't have to do the big bang type of capability. They can actually say, okay, what's our biggest pain point? And let's start to mature it. Let's start small and start these little bite-sized things and then start being able to automate various processes. Fantastic.
Any other quick thoughts, guys? Go ahead.
Yeah, I would be surprised. 15% of the folks don't have plans at this time, and that's a little surprising. Okay. Just to think of that. I mean, being on this call, probably it's probably of interest, but to not have plans, that's great.
Okay, great perspective on that, Craig. Yeah, thank you for that. All right, moving forward. So let's move on to our next panel discussion question. So I'm going to ask our mortgage automation superheroes, right? These are the experts, right? I'm going to ask them to look into the future. What are going to be the biggest challenges in the next 12 to 18 months? And let's get some perspective on that. So I think here, Paul, let's have you kick this one off, and then we'll go to Craig and then to Pat.
Yeah, gladly. I'm going to give 3. And buyer fatigue is a big one. Obviously demand is still very robust, but indicators are now pointing to a cooling marketplace. Bidding wars dwindled over the last 2 months. Home sales fell annually in August for the first time in 15 months. And housing values just keep ballooning, and it's hard for consumers to keep up. The overall median home sales price in the U.S. posted double-digit year-over-year gains for 13 consecutive months, and that is just astounding.
Wow.
So, I mean, that's just a lot, right? And mortgage rate growth is another. The latest forecast from Fannie Mae projects the 30-year FRM to finish this year at 2.9%, but jump to 3.2 by the end of next year. And that's still, relatively speaking, a very good rate for borrowers, but it does cut the number of potential refinances, and it gives an affordability hit to buyers. And thirdly, I'm just going to say that servicing and all pandemic-related forbearances and foreclosures.
Yeah,
right
foreclosures.
now,
Yep.
yeah, I mean, it's obviously that's a big deal right now. 1.5 million borrowers remain in forbearance as of September 12th, and over half of them are supposed to exit their plans by November. And that's just a lot of volume to deal with and a lot of outreach for servicers.
Okay, Craig?
Yeah, those are all really good ones, and I'll probably just dig into one of those a little bit and talk about margin compression. So Paul mentioned about, the fixed rate mortgage going up to, ballooning up in the following year, so less refinance. So volume compression creates margin compression because fixed cost of basis actually increases when that occurs. It also creates more competition. And so when you have more competition, then you have less pricing within those rates. So, I think the affordability piece is also important, but I would say what will the effect of that happen to mortgage companies is probably our greatest threat. So, to us, I do think the forbearance, the pandemic related forbearance will be very, very interesting on how that has an effect on servicing values. Valuation. I feel very comfortable with the way we've handled that this year. So, our focus is really on margin compression, and we think that a lot of money has come into this space around the fintech space, and it's really geared towards being a low cost provider and being ready. Like when that music stops, do you have a seat at the table? Like, are you going to be there? Mm-hmm. And that music will stop in probably that time frame this question poses. So, for us, margin compression is the number one focus.
Got it. Yep. Pat?
I also have three things, and much of the overlap, a little bit different as well. So to look in the future, I do think that forbearance is going to have, some impact. And so it really depends on where you're at. The people that are doing the lending, they might actually say, okay, like that, there might be a lull, but it might not. And the reason that it might not is because it depends on where those forbearance, people coming out of forbearance, where they go. Like, are they going to actually go through loss mitigation and, have some sort of loan modification? There's still work to be had around the servicing of those, as well as foreclosure. And so let's, go down that line. Now, if there is a bunch of foreclosure and all of a sudden we're flooded with possible home sales, then that's going to bring down the prices. And if it brings down the prices, and if you compare that with still really low interest rates, and we're going to see all these new closings. So it's just kind of a system that feeds itself, and maybe different aspects and maybe a little bit delayed for certain pieces of mortgage. But I think that it's still going to be there. With the ballooning costs of homes, there might be more of a boom for mortgage insurance. And so, these are all aspects of the mortgage industry, and I think that they're going to be impacted by forbearance a little bit differently. One part and I think that this goes pre-pandemic, but it seems to be compressing is the problem around just talent acquisition and keeping people. That there's all these old school people that, came from the mortgage industry, understand it really well, like the back of their hand. And a lot of them are leaving, and it's not that easy of a industry just to become really smart about. And all of a sudden you're trying to train and trying to do knowledge transfer with a bunch of new people, or at least trying to create an environment that both culturally as well as a monetary benefit to work at a particular place, because there's a lot of people that are going to be hopping around, and that goes around the entire. Basically the whole workplace. People are really reflecting on what they do, how much they like it, and popping around. So, making sure that you actually retain the people that are there. And my third one is actually technology. And because I think that the next 12 or 8 months, and it has been in the past, there's more and more people that are coming up to speed in technology and having different technology offerings, and being able to understand who is really good at marketing as opposed to who really can actually implement, because it's usually more than one tool. There's not just like this golden key solution that is going to handle all of the things that somebody might want to do, and take us to the next level of maturity in the mortgage industry, not just handle this automation, but how do we actually get to the point where we can do much more with much less?
Fantastic. Yeah, great points. Thank you, Pat. Appreciate that. Panel, we're gonna stay with you I've got my next panel discussion question, and Craig, I'll ask you to kick this one off. How has customer satisfaction, let's think, so we've been talking about kind of the general backdrop, supply and demand, the market conditions. We talked about technology. Let's talk about the borrowers. Let's talk about the people, right? Let's talk about the people who are engaging in borrowing and submitting these applications. How has customer satisfaction, how you engage with customers changed since the pandemic? Craig, let's start with you, Pat, and then Paul, I'll have you finish this one up.
Yeah, I mean, sadly, I think more people have done, well, factually, more people have done a mortgage transaction in the last 18 months than they had in the 18 months before that. And so it was a reminder of the painful process. You know, it really, there are studies that show the longer that you're in the pipeline, the more frustrated or lower your NPS scores are as a result. And that's not just because time is the problem, but what it represents is this constant ask for more information from a borrower. There's this lack of transparency of like, where is this finish line? It's still the dark hole. You know, it's a black hole when you send a document over and you think you're done, but then there's another document that you need. And so, you know, customers have just kind of grown really tired of the process. I've had people tell me, and this isn't a fair comparison, but it definitely shows sort of what the expectations are. During the PPP loans, there were some business owners, local business owners in my town who used my company for a mortgage. And they said, you know, I got that loan so much easier than, you know, dealing with you know, like, and they always compliment the person they're dealing with, right? They compliment the person that they're dealing with, you know, well, Bobby, the loan officer, was great. And, you know, and you know, Johnny, the processor, was great, but man, that process is tough. Right. And so I think everything that everybody does is just gotten so much easier in the mortgage industry. Again, I use the word exposed. And I think the customer engagement, and that's going to be the true disruptor to all of this, is going to be that engagement level. So, you know, it's definitely been a tough experience for borrowers over this last 18 months.
Got it. Yeah. Pat, your perspective on customer engagement and perception?
It's pretty much what he said. You know, it's visibility and speed. You know, like, where am I at in the process, and how fast can it get done? And being able to do that in a 24/7 fashion. You know, like, I don't want to wait until Monday to talk to some sort of, you know, my processor, my underwriter, to be able to understand what's going on. You know, like, how do we actually give visibility at any given point of saying, you know, it's in our hands or it's in your hands, and then if it's in your hands, making it easy as possible to basically kick it back over. Because it doesn't matter if it's, you know, Friday night after they get home from their kid's softball game. They just want to be able to know that they've actually done what they're going to do, and be able to access that information at any given point.
Yeah, and Pat, I'll chip in real quick. Oh, sorry, Paul, one second. Someone said to me, oh, you know, I can order and track my pizza, but I don't exactly know where my loan package is. You know what I mean? Like, it was that sort of unfair comparison, I think. But Paul, apologies there for cutting you off. Over to you and for your perspective on this.
Yeah, no, not at all. So, you know, when we went into lockdown and faced the brave new world together, I think people had an understanding that everyone was struggling and trying their best to figure things out. But that only lasts so long, and the lending show still had to go on. So, you know, once most companies found their pandemic bearings, staffed up properly, and handled their backlog pipelines, I think they were able to handle their customers again, which obviously is good, because as a society, we've gotten used to buying something on Amazon or anywhere else online and it showing up the same day or the next day. And that's basically turned everyone into Veruca Salt from Willy Wonka. When they want something, you know, they want it now.
I want it now.
Exactly. So, you know, waiting 49 days for a loan to close or 2 months to get an appraisal on your house doesn't really match the rest of societal expectations. But I think customer satisfaction and engagement has improved over the last year. And that's important more than ever now, with loan activity coming down a little bit and competition getting tighter. And, you know, I also think that places with higher digitization have better customer satisfaction too, because the younger borrowers want the ability to access more things online before having to get on the phone with somebody or meet them in person. Yeah.
Paul, great perspective. Appreciate that. Okay. All right. Let's go to our next audience poll question. So audience, here's your opportunity to respond in. What are the main reasons from your perspective, and check all that apply. We want to see everything that looks interesting to you. What are the main reasons to automate the mortgage and loan processes? So go ahead and vote. Make sure you check all that apply and hit submit. Is it customer experience that we've just been talking about? Is it more, internal manual data entry? Is it processing efficiency? Is it cost related? Like what are the drivers from your perspective that may encourage you to automate? So go ahead and vote. All right, people are weighing in on this. Productivity, human error, manual data entry, like what do you think? And vote for all that you like. We'll give you a few seconds. Make sure we get everybody a chance. All right, let's give 10 more seconds here. 8, 7, 6, 5 seconds. 4, 3, 2, 1. Okay, let's have a quick look. Whoa. Okay, so I don't know, gentlemen. Do you see anything that surprises you? Or I think it's pretty much a sweep across the board. A little bit of variation. Anyone have any thoughts on this one?
I'll jump in. I was kind of surprised that cutting costs was the lowest out of everything.
Okay. Okay. Yeah.
Yeah. My reaction to that is it's a sort of a byproduct of the if you focus on the others, you'll get that byproduct, yep. Right? So then I think the customer experience kind of points to the biggest opportunity, in my opinion, and that's probably why that's number one in my opinion. And then productivity that will sort of lead to cutting costs.
Sure. Yeah. Some dependencies there. Yeah. Good points.
Yeah, I agree with Craig. I mean, essentially that if you can get those other things, because mortgages are an interesting experience in the sense of if your buddy says, like this was the most painless process and I got great rates, many times they're not going to even shop around. They're just going to be like, okay, I want to do that refi.
Yeah, we're slow business.
For a while. I'm just going to go do it now. So if you actually have that capability of being able to do it quickly, boost your employee productivity and improve the customer experience, then you're going to be able to not only retain customers, but be able to grow customers.
Perfect. Okay. Excellent. Thank you for that. All right, panel, back to you. So we've kind of looked at the current operating conditions. We've talked a little bit about what we think is coming or what is changing. We talked a little bit about customer experience. What is the advice now from your expert perspective on what we can do right now to either remain competitive or you boost your competitiveness? So Pat, I'm going to have you kick this one off, Craig, and then Paul. We'll go through that order. So Pat, what do you think?
I have a couple of ideas there. And as a systems integrator, the first thing you think I'm going to say is technology, but that's going to be the second thing I say.
Okay. All right.
The first thing that I'm going to say is really, take a step back and just look at your process. There's more and more people that have had the opportunity to grow and have had new opportunities in the past 18 months, if not the past 5 years, to be able to have a growth in volume. And they've just had blinders on their process. And I've seen, more and more people still today, I'm still having phone calls and finding that an underwriter is doing classification and separation of documents, that they have no automated process. And it's just that I have to wait till Monday till Susan or Johnny decide, I don't have everything I have to underwrite. I'm going to have to contact. And it's like 4 or 5 days after they made that initial contact. And so, just look at who's doing what and how you can actually make your process more efficient. Now, my second thing, that may be through technology. Having the capability of being able to integrate and automate, might give you that capability. And so, that's when you can start looking at technology. But unless you actually fix your process, technology is going to only help so much.
Good points. Craig?
Yeah, that's exactly right. I think to remain competitive, you really need to sort of break your file flow, workflow down, which is a sort of linear, file gets passed, and really break it down to its tasks and it's very, down to its core components, right? And, Pat mentioned something earlier about Saturday night uploading documents and waiting till Monday for a processor to hopefully, get into their email, catalog that document, then maybe send it over to the underwriter on Monday or Tuesday or Wednesday. And then the underwriter has 48 hours to look at that document. And by maybe Friday the next week, we'll know if that document was clear. And I think if you're looking at this on a task-based flow, you're not doing it that way anymore, right? You are using exactly what Pat mentioned. You're using classifying what that document is. You're potentially using some data scrape technology, and you are producing a result, a pass-go sort of right there on the spot on Saturday night. So in the event that it's the wrong pay stub and it's the wrong banking time frame or whatever, you can tell the borrower Saturday night when they're actually in front of their computer screen to give that back to you and update the right one. You really don't have to wait those days. And I think, all of that time sort of leads to the frustration, and it also adds a lot of cost. So I think if converting your mortgage company to more of a task-based process that's more transparent, that costs a lot less to produce is what a company can do today to remain competitive, as we go forward, because that's going to be the disruptor, is someone who can do those things.
Perfect. Paul?
So, you have internal and external levers to pull, right, to raise competitiveness. And leaner times usually call for reducing loan officers' profit margins or undercutting the going interest rate to win more business. But I don't know, I always like outside the box ideas, and some lenders will offer their borrowers incentives to take out a mortgage with them. I saw a few months ago a Canadian lender launched a program where it would give shares of Bitcoin to consumers who originated with them.
Okay.
That's
smart.
fun.
People are interested, right? Yeah.
Yeah. It definitely got headlines. I covered it.
It caught your attention, right?
Exactly. And in August, there was a Colorado-based lender who offered a $500 discount on closing costs with proof of COVID vaccination. So, you could really get creative and do anything, that's within regulation confines. And then, of course, staying on webinar brand, digitization helps with trimming costs by automating back office tasks and streamlining workflows. And that efficiency leads to being able to take on higher volumes.
Perfect. Okay. Thank you for that. Appreciate that perspective. All right, audience, poll question coming at you. Take a look at this one. Top 3 technologies. I know it says check all that apply. Please check 3 of your priorities for technology. This is something that we've been touching on in various questions, but now let's send this out to the audience. Let's kind of see where the audience is at. What are the 3 technology priorities at your company? So check 3. AI or machine learning, artificial intelligence, machine learning, automation, like for example, if you're trying to automate your underwriting, is it to try to try to use more low code or no code applications? Is it just getting cloud applications up and running? Is it more of a data management thing for you? Or is it analytics? Like, what are the 3? So I'll give you a few seconds. Please vote now. This is really interesting for the speakers to see kind of where the technology focus is within the audience today. So go ahead and vote. Make sure you choose 3 that you like or are interested in, and we will take a look at the results. All right. So go ahead and vote. Make sure you submit. All right, let's give another 10 seconds. 5 seconds, last call, weigh in, get your votes in. All right, let's have a look here. Okay, looks like analytics, well, wait a minute, automated underwriting, edging out analytics just by a bit. So speakers, your responses.
That doesn't really respond. We gave an example of automated underwriting. So, automation.
Yeah, I mean, that was a little bit of a leading question almost, right? Yeah.
A lot of different aspects of the mortgage process. The data-driven reports or analytics is interesting because one thing that we did not really touch on as of yet is how do I actually have enough information for being able to cross-sell, upsell different offerings, and so having the capability of saying I know that that somebody has a higher interest rate, I should send them something that's directly and that they can refi for less and that they're going to be much better off, and being able to actually have enough information to run those reports regularly and know where you're at from a risks point as well as an upsell point is crucial to, if things do slow down a little bit and still being able to thrive during that time period.
Yeah, that's one perspective for sure. I'm actually perfectly aligned with the audience with this question and this answer. I agree. This would be sort of how I would prioritize these items as well. And data-driven reports and analytics, if you do try to sort of get your workflow down to its components, that's another area where data analytics come into play, and as well as just performance. As if you have a decentralized workforce now as a result of the pandemic, like we do, you're going to really need to be able to fine-tune, analytics to be able to understand performance, right? You're not just going to be around people anymore. So, yep. I think this is great. And then, of course, automation and automating underwriting. It is amazing how long we've had DU and LP, and we've kind of not gotten much further past that. But you're starting to see more and more people taking shots at it, and you see some potential, opportunities there that come out of that. So that's an area we're very focused right now, and that's for us. That's not a build. That's more of a buy opportunity at our organization. So love these answers.
Great. Fantastic. Well, I think that's good news for the audience. They're really dialed in, and Craig, thank you for that confirmation. Appreciate that. All right, guys, back to you. Let's drill in on some of this technology, right? I threw out some terms. I think some of them didn't get as much interest as what I was anticipating, but that's why you're the experts. What aspects, and Pat, I'm going to ask you to lead off this question. What aspects of the mortgage industry can be improved? We just talked about underwriting, of course, but what are the other aspects, right? Improved by hyperautomation and intelligent processing. Pat, we'll start with you, Paul, and then Craig, we'll have you finish this one up. So Pat, why don't you get us started on this?
Sure. I think that it's important to first understand, we're throwing out a term hyperautomation. What is that? How is that different than automation? How is that different than anything else we've been talking about? And it is kind of a buzz term because this is something as a systems integrator we've been doing since, we founded Zia Consulting in 2003, and even before that when I was with other companies. So hyperautomation is basically identifying these business processes, and it could be something as grandiose as underwriting. It could be something as micro as trying to say that I'm going to process a DU. So it could be all over the map. So identifying those processes that can be automated, and then identifying technology, and it could be technologies that could be able to present some sort of automation opportunity, and then doing those just iteratively and quickly as possible. So it could be things like capture, intelligent capture solutions, ML, AI, intelligent artificial intelligence. It's definitely, something around the robotic process automation, RPA. It's become hot over the last few years, or, what more traditionally business process automation, business process management, BPM, as well as integration to line of business systems like a loan origination system or a point of sale. So it's important that people understand what hyperautomation is, because a lot of people on this call have been doing this for a long time, and it's just the terminology that kind of umbrellas that concept. But it can be at different places, and we've helped different people achieve those task level hyperautomation. So from a point of sale or a self-service portal capability, it's exactly what Craig said a while ago. How do I actually say, that's the wrong W-2, or you're uploading the wrong thing, or I don't even know what that is that you just sent me, and getting immediate feedback as opposed to that 2 or 3 day have a person do it kind of capability. Mm-hmm. Underwriting is really interesting because people have been talking about this as that this is the thing that's going to take us to the next generation, and I don't think that it's impossible, because taking things like capture, taking things like BPM and integration, you can figure out what is the debt to income ratio. What kind of income do they have? What is their pay stubs? Regionally, what kind of risk it is. And so you can start saying that there's these green ones that we can just accelerate it underwriting. We can take these red ones where you're like, no way that we want to actually take that risk. And then there's the gray ones. And the gray ones are just kind of like the ones that we can say that we're going to take a look at a little bit closer, which essentially is the process that we're doing today. But having that capability of both integrating to other services like Plaid, as well as capture and business process, spinning that off, it gives us the capability. And so we just have to define what those things are, and then we can actually make it really honed in. We can say, first make it loosey-goosey, that one would be pre-approved, but I want somebody to tell me that it is. And then start saying, once we're confident, just start sending them through. Another example would be like loss mitigation. Recently, somebody's been fined $250 million for not complying for their loss mitigation capabilities. And we have a customer now that has the capability of being able to say, okay, this is when I receive the application. I want to pull all the information off. I'm going to label that correctly. I'm going to kick off a business process that will make sure that we're under the SLA of being able to respond back or getting any sort of other documents that we need for somebody that is applying for loss mitigation, and then the underlying decision on whether or not they can have some sort of delayed payments or some sort of loan modification that they're qualified for. So they're able to understand, to know that they're under compliance. But then secondarily, if they're ever audited, they have enough information that they're persisting to the back-end system to say, hit the easy button. Here's the report. Here's everything that we've done for this thing. No, I'm not going to give you $250 million. So and those are just a few examples. That if you look at people that are doing, quality control, people that are doing mortgage insurance, it all comes down to, what are the 12, 15 documents that I really care about? What is the data off of those documents? What other systems can I pull information on when I'm directly like interacting with banks or what have you, payment systems, and be able to automate these different processes.
Excellent. Okay. Paul?
Well, first, I'm glad Pat's on the call because I couldn't explain that if I wanted to. So underwriting, I think, is the biggest one. It obviously has to be built right, but automation removes all the menial and manual work loan officers used to do and takes away any potential human error in pulling and miscopying information from form to form. Lenders like to say underwriting is an art and not a science, but there's no reason that it can't fall somewhere in the middle. If decisioning is fast-tracked by automation, homebuyers know their approval status faster, which, as we already established, is exactly what people want. And automation cuts down lender processing times. So that leads to lower costs and higher revenues through them being able to do more business and customer satisfaction. And then I guess lastly, servicing is another one that this could really help because with forbearance protections coming to an end, getting or loss mitigation waterfall is crucial to the health of the housing finance market, and it can keep people from losing their homes.
Excellent. Okay, perfect. Craig, you want to take a shot at this one then?
Yeah, a lot of things were covered there. I give an example of, an intelligent processing solution that has actually gone well, but sort of also talk about where it really stopped short. So there's dynamic needs lists are very common now in point of sales. Any sort of off-the-shelf point of sale has that. And what that means exactly, for those that sort of want to understand that a little bit better, is like when a borrower is completing information based on the fields that they complete, there's a needs list that's being built, and on the last screen you'll get to things. So for example, if you put down that you're divorced and you're paying alimony, then you might be asked at the end for a divorce decree, right? If you have not 2 years of a work history, that borrower might be asked for both jobs, W-2s. So that's very, very common. But that's just what we do at the upfront part for document collection. It kind of stops there. And so you can do more of that with a borrower. And I believe that really falls into the intelligent processing solution, right? And that's the hyper automation. And then there's a lot of back office things. And I'll give an example that I will tell you that my business user, and I'll back up real fast. In order for these things to work in your organization, you need to have the heads of your underwriting, your processing, your closing departments to really understand what technology can do and where it can apply within your organization. So the one example that I always give is the one that was our aha moment internally, which was a flood certification, right? Very, very simple concept, right? You order flood cert, it comes back and says you are or you're not in a flood zone. If you are in a flood zone, the processor uploads it and the underwriter will condition get flood insurance, right? Pretty straightforward. You don't need any human involved in that transaction or in that one process at all, right? You can even have at the point of a milestone, the button gets pushed for the order comes back, the document reads it is or it isn't, creates an underwriting condition. It even can communicate directly out to your borrower. Appraisal delivery is another one of those examples. You have to deliver an appraisal within 3 days of closing. Those are examples, in my opinion, of intelligent processing solutions and or hyper automation that it's real time upon the event occurring, whatever that event is, the activity happens. It can happen any time of the day. It happens 24/7. And again, the borrower is being communicated to in real time. So I think every person on this call that works in a mortgage company could go into their environment, and it's very easy in a Teams environment, right? You can, or a Zoom environment, you can just pull up and you can watch somebody work, and you will identify many of these examples of these stare and compare, of these I can't believe you spend time doing that. Pat mentioned robotics. We use robots for things very simple like printing. Like a lot of people don't want to use robotics for maybe redisclosures of documents because they're concerned, well, what if the documents are wrong? Okay, fair enough. So maybe your first step into that is have your business user, right, do all of the validation, but instead of them going through all the prompts of printing the documents and sending the documents, let them hit a button and let the robot take it from there. Now, you validated everything, but you don't need to spend those minutes doing those things. So, I think that automation comes in different shapes and sizes, and it's really, if you just kind of have to like dive into it, and you're going to find a ton of opportunity within your organization.
Perfect. And Craig, that's a perfect segue. I want to ask you to stay on. I want to just give this one to you to talk a little bit about how you've used automation inside AnnieMac. So we don't have a lot of time left. I want to save a few minutes for questions, but Craig, I really wanted to get your perspective. What are some of the things that you've seen, and what advice do you have for the audience?
Yeah. So I gave a couple examples on the last question.
Yep.
I say start in the background, work on very small things, get the confidence of the user community, because there is a psychological barrier as well. Like people do feel like they're being replaced, right? There's sort of a way to communicate to people because you need that buy-in, not just at the manager level, but the employee level. And so we really worked the back office most. Like we started with MERS, transfer some servicing opportunities there, purchase advice, shipping files to our investors was one. And what you do is you can ask your employees to say, what are some of the things that you don't like doing? And then you can probably automate those things, right? Another area is if you're outsourcing any of your functions, I hope there's no outsourcing firms on this call and take this the wrong way, but if you are, you typically have to write a very tight standard operating procedure, right? Like if you're going to outsource something to somebody, they need to really know how to do everything. And they really need to have that decision tree all the way down to every sort of possibility. If you've done that, you probably have the requirements for some sort of automation as well, right? So if you've been able to communicate to a third party how to effectively do a job all the way through, that's probably your requirements document as well. So, partner up with somebody that, either hire internally or partner up with somebody externally that can take a look at those standard operating procedures and see what they can do for you. I think that's a really good starting point.
Fantastic, Craig. Thank you so much. Apologies for the tight timeline. I want to save a few minutes for questions. Thank you for that summary. We really do appreciate your perspective. Audience, as you've seen, really the way to stay competitive is automate. You've heard great advice from Craig and Pat and Paul on the areas that you can look at. These guys have a perspective and experience in the industry that really sets them apart, and that's really why we invited them today. So hopefully you enjoyed the commentary. We did want to make an offer available to you. At Ephesoft, we believe if you're interested in doing this automation, if you want to see this document processing in action, We'd encourage you to come out to the Ephesoft.com website, get-trial. You can see the URL right there on the slide. We believe that if you see your documents flowing through an automated processing system, using machine learning, using AI to extract the data you want, to automate those processes, that's really where you can identify what's going to work best for your business. With that, I did want to go to some questions. So if you haven't already typed them in, unfortunately, we don't have a lot of time. We'll try to answer any questions we can. We've got a few already in the queue, but if you think of something, please go ahead and type it into the question function, and we'll try to do some of these. Okay, guys, we're gonna get started. This is a great one. I saw this one right away. I'd like to try to do this one first. With the shift to using more technology, we've seen skills needed to support that technology after the implementation aren't always available, right? You know, technologists and IT people are really in demand. How can lenders mitigate that risk? And the comment really was, it's kind of hard to rely on consultants long term. I think this is a real concern. You know, you drop this technology and it works great, but now you need a different skill set. So who would like to take a shot at that one? I think it's a great question.
I can take a shot at it, and I'm sure other people have perspectives because I'm one of those consultants. So we started Zia and trying to make a different consultancy than we came from, because we came from the top 5 kind of consultants, the people that started Zia, and we wanted to create something that is different. And so we have this epic value, and so what that epic value means, and it's kind of an acronym, is that we hold employees, partners, and customers all with a center of integrity, and so that's our epic value. And so we don't consider that we are just consultants and that we're going to come in and we're just paid hired guns, but we're partners. And so we feel successful when you're successful. So there's that aspect of it. There's going to be some pieces that you're going to hire folks that are like myself or others to be able to help you map out this future. The other thing is there's going to be more and more, and there already are a bunch, right? There's SaaS offerings that are capable within the mortgage world, and that anything that you can do inside of that realm, then you might be able to be a little bit safer when it comes to what kind of responsibility you have over the technology from day 1 to day 2. That's going to be a little trade-off because you're going to have a little less control over what things change or when things get fixed. But for a small and medium type of businesses, that might be a good direction to go.
Fantastic. Anyone else?
I would just say that sometimes the the monitoring of something like a robotic process automation is sometimes best to be done by third party. And the reason for that is because those third parties can have multiple lenders at once. You kind of get an economy of scale there, whereas rather just having kind of like a cybersecurity thing where, it's sometimes best to outsource. So I do think there's a lot of opportunity there. But yes, the demand for technologists is very high, and we've certainly noticed that as well, and our ability to find more of them.
Perfect. Okay. All right. Looks like we still have a couple minutes here. This one is it possible to build custom logic for approvals and other types of workflows? So guys, thinking about how mortgage businesses can be a little different depending on kind of how you focus and where you're at with respect to technology and other things. How hard is it to sort of customize this to fit the business? So who would like to take a shot at that one?
Sure, I have no problem. I'll take a shot at it. Yep. The other workflows, whatever, depending on your definition of a workflow, but yes, the workflows are very easy. That flood example that I gave, we would call that a workflow. I know it's just one thing, but it's one thing of a bigger workflow, but that would be a workflow, a process that we change. As far as custom logic for approvals, that's kind of an example of something I would go outside for. That when I said I wouldn't build that, I would buy that. And there are some providers out there that are doing some really good things as it relates to custom logic for actual conditional approvals. But that would be more of an outsourced function, in my opinion.
Okay. Yeah. Guys, any other?
Yeah, I agree with Greg. The capability of one of the things that we should probably define that we had up there is no code, low code. And what that really means is that that gives you the capability of not having a programmer do it. That it can be done through, somebody that might be a business analyst. And so, being able to have a system that is configurable by somebody that really understands the business, as opposed to somebody that has to understand the business and then somebody that has to program it. There are quite a bit that can do these kind of workflows, where you can kind of drag and drop, if income greater than this, and if debt ratio is this, and then this, and then that workflow will then go to perhaps a different queue on different people that would do that approval. So I think that there are ways of being able to do that without having to stress kind of development efforts.
Okay. Paul, anything to add, or did we cover it? Or
I mean, it sounds like you guys covered it. Yeah.
Okay, got it. All right. I think we have time for just one more, guys. If you just give a quick one for this. Capture automation can be used with an existing loan origination system. So I think this is really more of a concern that we're going to bring in some new technology. It may not work with my apps. Is this a standard type thing, or what is it? So who would like to take that one?
The answer is yes. Yeah,
yes.
You can do all those things.
The answer is it will work. Okay.
You absolutely
the answer
can do
is
that.
yes. There's a bunch of different ways that you can use intelligent capture and use it within an existing system, and that can go from everything from that. There's a workflow to deal with exceptions within that, and there's some that could just say, I just want to call out a web service and say, bring me back the best that's possible. And we have been integrating it in various POS, LOS systems, homegrown or COTS type of products. Again, Craig is right. The answer is yes.
Commercial off-the-shelf COTS. Yeah. Okay, great. I think we have consensus on that. Guys, unfortunately, that kind of brings us to our close here. Ladies and gentlemen, I want to thank you all for your time and attention today. We've covered a lot of ground. We have definitely covered a lot of good topics. It was really interesting to see the audience participation, see the polls come back. On behalf of Ephesoft, I want to thank our guest speakers, our superheroes in mortgage processing. Guys, thank you all so much for attending. And audience, I did want to give you one little note that if you're in the San Diego area, this for the Mortgage Bankers Association, we will be at booth number 728. So if you wanted to come down and talk automation, we'd love to chat with you about your projects. Gentlemen, thank you so much for attending today. Audience, thank you so much for your comments and feedback. Until next time, have a fantastic day. Thank you so much. Have a great day.